So let's now step it down to the daily, because in indicators and in trading, we need to understand that one, we have leading and lagging indicators. The leading indicators will tell us what is about to happen. Okay. Then the lagging indicator will tell us what has happened. All right. So what we want to do as a trader is to stay in the middle. We don't want to be too late and we don't want to be too fast. Because if you are too fast, you are going to enter a lot of false signal. False signal means that it tell you that something is about to happen, it will not happen again. It's just like fear when you are afraid of something and that thing did not later happen. That's the way the leading indicator does. That's what it does for you. It tells you what is about to happen. And that thing that is about to happen most times may not happen, and sometimes it will happen. That's why we always recommend that you use leading indicator for exit of a trade. So if I'm buying now and price is getting to maybe a particular resistance, it's a leading indicator telling me that when price gets here, there is higher chances that price will be resisted. So what you will do at that level is to just sell there. Don't say, let me wait and see whether when price get there, let me see whether it's going to resist it or not. Because by waiting at times, when it hits that part, it will now fall. You will now be tracked. It's better you sell at that resistance, even if you are not going to sell all, you can sell at break even, meaning that you sell at a risk-free trade. What you put inside, what you invested, you cash it out, then allow the profit to keep making profit for you. That way, you have removed emotion from your trade. That's one way. Or another thing that you can do is just to sell a portion, reduce the risks, and also what do you do when you reduce the risks? You are also reducing the what's it called? You reduce the risks and you are also reducing the I don't want to say profit now. There's another thing that you are actually reducing the risk of that trade. Okay, so just take it like that, that you have reduced it and you took part of the profit. You understand? Taking part of from the profit and also reducing the risk. That's what you do when you sell a part. So leading indicators are actually good for exit, while lagging indicators are good for entry. So lagging, you will now use that lagging because it's telling you what has happened. So if it has happened and is now gaining ground, maybe it's now becoming pronounced, that's when lagging indicator will start saying it. At that level, if you want to use it to enter a trade, it's actually good. Because that way you are double sure that, oh, this thing has turned. Okay, this thing is about to go up. So let me now step it down to you notice that I started from lagging from the monthly. I see the general outlook of what is about to happen. And this thing that I'm looking at can take maybe till next year to play out. So like 3 months, 4 months time, that's when this one will play out. Let me now look at the weekly. The weekly can tell me what will happen in the medium term. Let's say between 4 weeks, 5 weeks, 6 weeks. That's what can happen. So when I now come to daily, daily is telling me something will happen in maybe in the next 3, 4, 5, 6 days. So we are going into the week now. This week is 5 days. So I can actually step it down to the daily to see what is about to happen in the daily and use it to now trade this week that we are entering now. So on the daily, you will notice that the market has formed a bullish engulfing. Thursday was the last trading day of the week. So for it to now form a bullish engulfing, and another strategy that I like to use to enter the market is that I want to enter when my awesome oscillator is switching to the negative side. I want to buy in the negative side of awesome oscillator. Look at it. When the market was here, it's actually I can buy there, but I don't buy there. You can buy there, but I don't. It's more like the market is already established, which is also another strategy. Me, I like to buy in the deep, but some people like to buy on a breakout. Breakout means that they want the market to be established first, that the market tells them that it is going up, then they will now join. But me, I will want the market to correct. When everybody is running away from that stock, I will get it at the discounted price. In fact, the lowest price possible. When I enter it, I will now wait for the market to confirm what I'm saying, especially when you see that on the larger time frame or the predominant trend is up. You understand? It's like flowing in the direction of the river. This market is not a bearish market. Please let us note it. It's not a bearish market. It's still a bullish market. Before you can have a bearish market, we need we need uh, a break of structure, and we need a change of character. So if I'm looking at this now, if you have been a member of my class, you will understand how I mark my structure. One, I'm looking at the low and the high. So if a low breaks high, that means that low is strong. It means that because the high is actually a supply zone, the low is a demand zone. If the demand breaks supply, that means the demand is more than supply. That's why it's able to break. If market moves something like this, if there's a move like this, look at it, something like this. What it means is that the buyer says the demand here is greater than the supply here. That is why we are able to get uh that is why price was able to break this level. So when it's going again, we get to a level, it will be tired coming back down. As it's coming back down, if we find support, you can find support anywhere between this place and this place. So it's going to find support. If we find support here now, for instance, and this level is able to break this level, the demand here at this price, let me put something there, which is 118,000, is more than the supply at where at this place, which is 129,000. That is why this place is able to break it. So that's how we continue to go until we see a low. This thing has not formed a low. If it's able to form a low and that low is not able to break the high, and that high that was formed, a lower high, now breaks this low, that is when we now start another trend. This is one move. If it goes like this and it's not able to break this high, and this one now breaks here, that is when we now say, oh, there is now an internal downtrend. We now mark our structure that, okay, this is my zone, and we now trade within that channel. Even at that, it's still just a minor bearish market. You know, we can have a major market direction and a minor market direction. Even at this, it's just forming a minor correction. If I look at it from the high of this bull run, this bull run, and it's now forming consolidation like this. This is a bullish flag. If you go and check your chart pattern, this is a bullish flag, and a bullish flag is also a bullish continuation. So this market can still go back and break this high, and we start another uh, move. So until then, we just continue to look at this market. So let me now show you what I'm seeing here now. We have a bullish engulfing at this zone, bullish engulfing on Thursday. So for a bullish engulfing to happen, it means that this low, the demand at this low is higher than the supply on the previous day high here. So let me mark it. That's what it means. So we can use this as a minor support, and this has crossed my negative side. This is the minor support that we are going to use to buy. This trade will be wrong when we have another candle close below this low. So that is our stop loss. That is what will tell us that no, guy, you are wrong. Just take caution. Either sell at break even or just reduce your risk and wait for market to tell you what he wants to do. As traders, we don't predict. We react to what the market is doing. So I think that's all about the on-share index, and this is what I expect in this week. So this week, brace up. Let's look for opportunity. Let's now look at the general uh, insurance sector. So I will just be looking at. You can be putting it in the chat, please. Just put it in the chat. I don't have admin rights now. I've already assigned admin rights to another person, so it may be difficult for me to unmute you. So just give me any insurance stock that you want me to look at now. Let me check NGX inch. So let's look at. All right, thank you. We also have a bullish engulfing at that level for the insurance sector. But my own challenge with this insurance sector is that it has not crossed to the negative side yet. And I like this because it's also a double bottom. You know what a double bottom means? I see a bullish engulfing here, and market came a little lower, formed another bullish engulfing. This is a double bottom. Let's measure it. Let's measure that this retracement. Okay, let me draw my trend line. Let me draw my trend line. Oh, sorry, I'm looking at the daily. Don't let me use this daily to do my structure. So let me check my weekly. It's my weekly that will give me what I would actually want to. Okay, you can see even on the weekly, we still have the most important candle body protected, and there is a fair value gap here. So market is just tapping into this fair value gap for its support. So two things I can do: I can measure the momentum inside this body. That's one. But I may not use this body. You know why I don't want to use this body? It has too much of retracement. I can use it, but I don't want to use it. So let me use the body of the next one, which is here. So this is the body I want to look at. The reason why I don't want to use this body, this candle has more momentum than this. This one has more of volatility. You know, wick represents volatility, the body represents momentum. So if I want to measure momentum, I'm actually looking for a candle that has strong momentum. This candle doesn't have strong momentum, it's just volatility. It's just volatile because everything was turned into wick. Then the next candle, small body, wick above, wick below. The next one, in fact, small body, wick above, no wick below. The next one, small body, wick below, no wick above. Actually, the market is struggling around this zone. So where's our entry strategy? Let's go to the daily. So for daily, what happened? Bullish engulfing here, another bullish engulfing here. That's a double bottom. So I'm going to use the low of this index here for my support. If this index comes into this place, into 1,186, we buy. That is one. That's one strategy. Another thing that I'm looking at that will give me a little bit of caution is because this awesome oscillator has not crossed to the negative side. That means it's not yet relieved. So because it's not yet relieved, I'm not going to take this thing above here. If this market should come close to this place, even from here, let me mark the body, is a sell because the market was not relieved. If the market was relieved, let me show you where the market was relieved. Here. You see, from here, it crossed into the negative side and stayed there for some time. So if market picks up at that level, it's going to move for a very long time. It's going to move very fast, not very fast. It will move for a long time. All right, let me just put it like that. It's going to move for a long time. But because it's not relieved, this is going to act as a very strong resistance. So let's note it. So this is the index for you. Let me now go through what people are posting for me. I'm going to pick only insurance. Please, insurance. If you want other stock, I've already said we should start a membership, Q&A membership club where you can ask different stocks. But here I want to be focused. Just give me insurance. Insurance is what I want to look at here today. So mutual benefit. So let's look at mutual benefit and see. Wow. For mutual benefits, the same thing is playing out. One, did not, the market did not, is not relieved. So we are going to use that level as actually a major resistance. Let's see what happened. Okay, this is strong. If you are buying mutual benefit, the lower the better for all these stocks, the lower the better. Although this is like a close above the most important candle, which I'm looking at. Do you understand? So the best entry strategy for this particular stock is to look for entry around the low of this. If you can get mutual benefit at 3 naira 25 kobo, good. Next one, 3 naira 41 kobo. Don't, well, you can buy here also. We just consider the risk reward, because if I buy here, my risk is here, my reward is somewhere around here. So this is more like risking 16% for 19%. It's too close. I will recommend that you have minimum of 1:2 risk reward, especially in this market that we have now. We should be able to see 1:2. When the market change its nature, or when the market is in another phase, because we are going to definitely enter another market phase. This is a bullish market. That's why I'm saying we should raise our bar and say, okay, we are looking for 2:1. The time we come in this market, if you get 1:1, thank God, just hit your 1:1 and go. Because in a bearish market, you won't be looking for 1:2. All right. So that's the way it is. So this will be my setup for mutual benefit. So any other one, VID, no, Academic Press, Calvary, I'm not going to do. What Aradel, we treated, I think we checked Aradel yesterday, we referred to the video. Then WAPCO. WAPCO is, what's WAPCO? Lafarge. No, I'm looking for insurance company. Please give me insurance stock to look at today, please. All right. MB, I've seen Suno. So Suno WAPIC. Let's check Suno. For Suno, Suno is still a good setup for me. Still a good setup for me. One, it entered into the negative side. I said I like entering when the market entered into the negative side. And if you check it on the daily, it entered into that negative side clearly. In fact, stayed there, crossed above again. But on the weekly, it only entered once and started going up. So for this market to go up like this, we are going to look for entry. If you get entry for this stock around 5 naira, 5 naira is like my very good price for this particular stock. If you get it there, but market will not always wait and give you what you want. At times you have to compromise your entry, but the lower the better. At current price, the risk is here, 30% risk, and your first target is going to be here, which is 34%. You now see that the risk reward is not too good. Although market can break here and still hit here, but this is the immediate resistance here now, which is 30%, around 30%. So I'm risking 30% for 30%. That's 1:1, which is not really very, very good risk reward. If you can have your average entry price at around 5 naira, I think this is perfect for me. Entry price around 5 naira. So it will now be risking 24 for 47, which is good. So our first target is going to be at 7 naira 30. Then if it breaks above, then we are looking at maybe 8 naira 35. Then if market is still very strong, here are the news that just hit. This news, I don't know how the news will still play out, but whether we like it or not, let me say it. Insurance company, this stock will hit this 11 naira 65 kobo, whether we like it or not. It's going to hit it. It depends on how long you can wait. It may not hit it this year, may not hit it next year, but from what I'm saying, it will hit it. So at this current level, please, if you can get it, it's good. I hope it's clear now. You already understand the entry. Best entry is 5 naira, but at 5 naira 50 is also good, but the risk reward is not really looking attractive. But if you can still take it, fine. That's my first target, and that is how I would have approached Sono Insurance. WAPIC. Okay. See, out of all of them, is one pick that did not really pull back. This is not this is no pullback, I'm telling you. And last week was a what? A pin bar. Although the pin bar is too small, it's too small compared to all these other candles that are staying beside it. This is a momentum, this is a volatility candle because it has wick, but this is actually a decisive move, momentum that I can see. I can see fair value gap still present here. So I'm seeing a lot of things. So that fair value gap is what is actually trying to hold that particular stock from there. So how do we enter this stock now? Let me check it on the daily. It did not quite pull back. It did not. This stock is actually strong. That's what it's telling me. So let me check the correction. That's the correction is going to be. You know why I use that? Because it has to engulf the lowest price. So I will not use this because this will not include the lowest price. So it has to always include the lowest price. So that is how this thing is going to look like. And from what I'm seeing, this is okay. We are seeing a kind of struggle here, engulfing here. Market is trying to find support inside this switch. There's a switch here. So let me go and check it on the weekly. How do we enter this stock? I think this stock still look more like something that a lot is happening here. There is a resistance here that is about to become a support because market tapped into here, came back, then break it. But if I'm going to look at it very well, let's look at the body of the candle that moved the opposite direction. So when it was going up, this is the candle that turned it back. Okay, this is the candle that gave that bullish continuation. Is here. So that is what I will use for my support because that week is too long. And then I think market reacted to it several times. Yes. So that confirms what I'm saying that yes, market reacted to it. Resistance, resistance, market came back and broke the resistance, use it for a support. So where is my best entry for this stock? If you can get it at 3 naira 2 kobo, 3 naira 2 kobo will be a good entry price. 3 naira 2 kobo. And what is the risk reward? Snap it. If I can get it at that price, my risk is going to, I'll risk it to this bottom, to this low. Then my target will be back to this high, at least for my first target. This is what risk reward. In fact, this looks so good because this risk reward is actually very, very good. You are risking 20% for 56%. Yes, this is support turns to resistance. All right, so another thing I will look at is let me measure the momentum in that body that is pushing it high. So that body that is pushing it high, you see what is happening? Market is just tapping into this place. Huh. This is more like my best stock. I don't know why. This is like a best setup for me that I've seen. So I hope you understand this now. So if you are entering at the current price now, you see that the risk reward is not looking so good again. So we are even at that, we are still risking 26 for 40%. It's good even at entry price. So it now depends on how aggressive you are. So you can look at the market. Which other one are we looking at? ICO, we check Sono ICO. ICO, ICO. So for ICO last week was a sell body. You know the strategy we are going to use to enter this ICO if you are going to buy it. You want to buy as low as possible because last week was a bearish body. So no, the body is the weight that is pushing it. So it will push it down first before it will go up. The body is too big. So it's going to push it down first. So we expect some correction in ICO by what I'm saying. Let me go to the daily. Yes, there's an engulfing there, but the lower the better. I will want to buy when it comes lower again. Because on the weekly, we have a bearish body. You know what it means to have a bearish body? That means it's the sellers that dominated last week. That's what it means. The buyers did not have much pressure. It was only the last trading day that they now managed to come back up. So that is how we are going to look at it. And that will be how far we can go on this uh, meeting. That's how far we can go in this edition. So until next week again, please join us. And if you are not a member of the community yet, you will see the link below where you can join and be a part of this growing community where we look at the market on a daily basis, on a weekly basis, on a monthly basis, just to make sure that we are making the best investment decision in the market. Until next week, bye for now.